The meeting, outlined in a memo, focused on staking, tokenization, and crypto ETF standards, topics critical to the ongoing evolution of the cryptocurrency market. The $10 trillion asset manager, which recently reported $32 million in Q1 revenue from its iShares Bitcoin Trust, is expanding its presence in crypto. BlackRock disclosed in its Q1 2025 13F filing that it held $5.4 billion in Bitcoin-related equities. Most of this exposure was tied to its investments in MicroStrategy, known for aggressively accumulating Bitcoin BTC 0.79% Bitcoin. Meeting details. The meeting covered a broad range of topics central to BlackRock's expanding digital asset strategy. Executives provided an overview of the firm's crypto-related products, including the iShares Bitcoin Trust, the iShares Ethereum Trust, and the BlackRock USD Institutional Digital Liquidity Fund. They also discussed regulatory considerations for staking, particularly how exchange-traded products with staking capabilities could be structured under current rules. The discussion centered on the tokenization of securities and how it fits within the federal securities regulatory framework, along with approval standards for crypto ETFs and compliance under the Exchange Act, according to the memo. Additionally, they explored options for crypto ETPs, including position and exercise limits and liquidity thresholds for the underlying digital assets. The meeting comes as Bitcoin surpassed $100,000 for the first time since February, riding a wave of optimism following a US U.K. trade agreement and broader crypto market gains. Mantra has failed to take advantage of today's market rally, erasing earlier gains due to continued negative sentiment. Weeks after the collapse of the Mantra OM token, users are still seeking answers about what happened. On Friday, May 9, OM was down 2.09%, despite a broader market rally, trading at $0.3667 and erasing its earlier gains. Earlier in the day, the token had climbed to a daily high of $0.3923, suggesting the potential for a breakout. However, it is now trading below both its 10-day and 20-day simple moving averages, which stand at $0.40614 and $0.4666, respectively. If Mantra can reclaim and sustain those levels, it would signal a possible shift in momentum. For now, though, technical indicators and investor sentiment are weighing on the token, suggesting that a reversal is unlikely in the near term. Instead of a breakout, OM quickly retraced, continuing the steady decline that has persisted for weeks. Investors still demand answers over Mantra's 95% drop. The token's slide has continued since the sharp collapse on April 13, when Mantra, a real-world asset token, suddenly lost 95% of its value. While the team initially blamed exchanges for liquidity mismanagement, online investigators have shared a different narrative. Several on-chain sleuths, including Chose and On-Chain Lens, highlighted large movements from Mantra's wallets to exchanges. While not definitive proof of insider selling, many in the community believe that's exactly what occurred. Fueling further concern are allegations that the Mantra team controls up to 90% of the token's supply. According to On-Chain Lens, this level of control allowed the team to artificially pump OM's price for months. In response to the crash and growing scrutiny, CEO John Mullen pledged to burn 150 million staked OM tokens, a portion of the team's holdings. With a circulating supply of 1.66 billion, the burn would account for just under 10% of the token's total supply.